Congratulations! You found the Sand to Pirls Stock Market Commentary for market week ending Friday, December 5th, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.08 to 0.95, declining into bearish territory. The total count of securities in bullish or bearish patterns rose 1% to 2,615. The count of bearish stocks increased 8%, while the count of stocks in bullish patterns decreased 6%. The Sand to Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 16 points for the second decline in 7 weeks. At a positive 172.75 points, it has formed a new top over plus 100 and continues below all 8 other tops above plus 100 and above all 7 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq 100 Trust ended in accumulation mode. Momentum. The CCI 20 Daily continues its Woody's uptrend and at plus 93.46 remains above plus 50, outside the range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 22 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. At plus 139.14, the CCI 20 weekly in a Woody's uptrend remains outside the plus or minus 50 range for a valid zero-line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, semis continues in the top 5. Brokers, disk drives, and banks have entered the top 5. Oil services, oil, and gold and silver continue in the bottom 5. Bearish, S&P retail, and networkers have left the top 5. Focus this week from www.theautomaticearth.com, Jobs, Shale, Debt, and Minsky, posted by Raul Ilargi Meyer. A few ideas highlighted in the article. Shale is a leveraged Ponzi. That's its most urgent problem. Even if shale could break even at low prices, financiers and investors would still leave the building. Both shale oil and gas have 2 big problems. 1. Projects are based on highly optimistic returns, and 2. They are financed with very large and leveraged debt loads. With WTI prices now at $66 a barrel and the first Bakken prices below $50 a barrel having been signaled, the entire industry starts resembling a house of cards, a game of dominoes, and or a pyramid shell, pick your favorite, more by the day. The vast majority of new U.S. jobs since 2008-9 have come from energy and related industries, which makes them a dangerously endangered species now that oil prices are down 40% and falling. Quoting Tyler Durden at www.zerohedge.com, the ripple effects are everywhere. If you think about the role of oil in your life, it is not only the primary source of many of our fuels, but is also critical to our lubricants, chemicals, synthetic fibers, pharmaceuticals, plastics, and many other items we come into contact with every day. The industry supports almost 1.3 million jobs in manufacturing alone and is responsible for almost $1.2 trillion in annual gross domestic product. If you think about the law, accounting, and engineering firms that serve the industry, the pipe, drilling equipment, and other manufactured goods that it requires, and the large payrolls and their effects on consumer spending, you will begin to get a picture of the enormity of the industry. Continuing to quote from the article, "I've been saying for weeks that lower oil prices would not be a boon, but a scourge for the U.S. economy, for several different reasons. And this is a big one. The losses to investors, the restructurings and bankruptcies, and perhaps even the bailouts, are a very much interconnected and cross-linked other. There's no resilience left in a system like this. It bets all on red, and that makes it terribly brittle." Thank you for viewing this week's Sand to Pirls Stock Market Commentary, prepared by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you have a great week coming up, and wishing you true success.